Don't confuse luck with skill. Stay tuned, we'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading, and today we're going to be talking about not confusing skill with luck. So, few lessons every day. There's a new lesson in the market, and you're going to hit a string of winning trades, and oftentimes that will happen in a strong trending market. And what can happen inevitably with almost every trader is that they can often confuse luck, some of that luck, with skill. And that can lead to some overconfidence, perhaps over trading, taking trades outside of your system, taking on trades probably too large for your account size or your skill set, your present skill set. And inevitably that can lead us to committing further errors. And oftentimes some of the worst psychological damage and biggest losses can occur starting off with just a very small trade that you take just on a whim because you're overconfident. You've had a good run, and you think that you'll take this small trade, and often you think I'll just maybe scalp a small position. But often what can happen with that is that you'll get lured into averaging in to a trade that you're already negative equity on. And that can really, in most cases, if you've read a lot of the Market Wizards, read some of the different traders' stories, you'll often read where some of their biggest losses started off as just a small trade position after they'd had a string of winning successful trades. And so it's really critical to remind yourself on a daily basis, regardless of what you've done in the past, whether you've experienced a huge loss or a huge profitable run, to stick to your trading plan. And often that can be, the market is going to continuously lure you with bait. It's a cruel mistress, and it will tempt you constantly with little subtle suggestions to test your emotional orientation, to test your mental framework and your approach to the market. It will give you oftentimes textbook setups that look like they're going to be massive explosive trades, only to suck you in to a losing position before it finally makes its move. And oftentimes we'll enter into those trades, perhaps break our money management rules or our position sizing rules, or we'll get in early. It's a daily battle to not, for me still, I'm a mechanical trader, but every day the market tempts me with wanting to take on a bigger size than I should be trading out of my account, with tempting me to get in early, tempting me to move my stop or to place a stop outside of where my technical level is. There's always little subtle things, but if you've been beaten down enough, you know that it's critical to just be placing every trade regardless of the possibility or the probability that you hypothetically think it's going to move. Just stick to your trading plan. Every trade is just another trade. Like Peter Brandt says, it's a datum point in a series of datum points that over time show where your edge truly lies. But it's critical that in order for that edge to show up and be accurate, is for you to be hitting your trades accurately and sticking to your trading plan accurately. The discipline really comes in being patient. It comes down to staying emotionally orientated. It comes down to sticking to your money management rules. It's a very simple process, really. And this is where a lot of traders fall down, is because they just cannot be patient enough and disciplined enough in terms of just sticking to their trading plan. So oftentimes we have a big run, bull markets. We see this every time there's a bull run in the stock market. We see people end up blowing up and losing all their profits, or taking massive losses and wiping out a huge portion of their trading account on one or two trades when they've already made a substantial return on their account size. So don't confuse luck with skill. Just stick to your trading plan. I talk about getting my 7-step daily routine for high performance traders. Every single day be working on your mindset. Listen to podcasts, listen to other traders, read, study the market, build your journal, set your goals for your goals for the week. Not monetary goals, but process oriented goals, skill set oriented goals. each day trying to improve upon what you did yesterday, and each week trying to improve upon what you did this week and last week. So keep it simple, traders. The biggest challenge you're going to have as a mechanical retail trader is keeping yourself in the game and not blowing yourself up. And when people blow up, it's usually from the same reasons. You know, they average into losers, they don't use stops, they hold on to losing trades, they take on too much leverage for their account size, all the same old stuff. So work on yourself, stick to your trading plan, keep it simple, and don't confuse luck with skill. Keep getting better. Have a great trading week, and may the markets go with you. Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.